Hey everybody, it's Dave. Welcome back to PreciseAlgorithmTrading.com. It is Friday, June 30th, 2023, and the market's had a nice day today. So did our accounts, and we're also walking into a shortened trading week next week. Markets will be closed or closing at 1 o'clock on Monday, according to, I just Googled that. Um, so I hope that's accurate. Uh, I believe it is. And obviously, well, maybe it's not obvious, but the markets will be closed on Tuesday, July 4th. Uh, so let's dive into what the markets did today and start here with the S&P 500. Um, this is back on 616, and then we pulled back into this purple line, the 626. So yeah, that's interesting. 6 trading days, and then we've pulled way back up again. And I wanted to show this too because I don't think it should be. I think it's important. I was worried when we got up past the third average true range here. I think you guys can see this without me highlighting. When this got outside the third average true range, this is one, that's two, that's three. We could have one right here in the middle, but I think it's pretty well defined by these moving averages. So that's sort of the mean. It sure works as the mean if you follow what's going on there, sort of thing. Um, so literally, when we had this pullback back here, and then we broke out here, toyed around with this, came back toward the mean, popped up a time or two. We've been off to the races ever since, and now we're here. And I'll have to turn that off to be able to show my cursor. The close on these candles, for what it's worth, that's a white or a open candlestick. Um, I have no idea why I said white. That's an open candlestick. This is a closed candlestick, and these aren't particularly colored for anything other than that. And so when they're closed candlestick, they're going down, and when they're red, of course, and when they're green and open, they're going up. So that means that the price. I'm gonna do this again to illustrate. Price opened here on that day, came up to that high point, closed at that point that's almost at the high point but not quite. Then the price opened up higher the next day, came up to that high point for just a little bit, closed at that low point, and that is it's a sign, not always, but it's a sign of a pullback. And you can see a lower close there, followed through, a lower close there, followed through for a little bit, a lower close here, followed through twice. Sometimes you have a lower close that doesn't follow through, and these are little choppy candlesticks, but then it did follow through. It just took a few days. Then we had one here and there, and so forth. So you get I think the idea here is a lower close after a move higher over here, and then a bigger lower close, and then even that followed through. But then you got snapback, and literally in that, that is the mean roughly right there. And so that thing went below the mean and then snapped back because it was in an uptrend. And similar when it came down here, snapped back to the mean. So we came down here and really hardly got to the mean and snapped back. But I want to really call out that if I put my crosshair across here, that's a higher close on a closing basis. That candle closed higher than the last time it was up in this zone. That's not to say it can't pop up here and pull back some more, but that's pretty bullish for maybe a longer term look at this thing, not to mention it gapped higher there. A gap typically is showing a lot of energy. a lot of times the gap gets filled before it gets a chance to really advance. So we'll keep that in mind too. Alright, but in any case, we've got green, we're red here, green here, and we still look like we're powering higher. Those are 52 week highs. That where we're at with that white line, and we're obviously not to all-time highs. I don't even know if I want to show that on this chart. I don't. Yeah, maybe. Yeah, no, I'm not going to do that. So I'd have to drag it out too far, and it'll mess up the rest of what I'm trying to go through here tonight. So, and July again. I'm going to point this out one more time for everybody. July. That's statistics based on 10 years because that's how much data I have behind the setup here for, if you open up the D there, it's daily, and then I have it set to 10 years worth of time. I'll prove that to you right here. 10 years daily. And because of that, it shows here 90% of the time the market goes up, or the S&P goes up 3.12% in July on average. Now that means, I don't know what the individual years would be, but you could have one that's up 5 and one that's up, 1, and you get the average between 1 and 5, which is I think 2.5. So or 3.25. I don't know. Anyways, we'd have to do the math. So let's go to and keep that in mind. That flag right there, that label is on purpose. I've got that so I can just keep an eye on what the market's doing. You can see here in August, so we got a month to maybe capitalize here, and then August it goes flat, and then we're going to be into September, October, when the markets tend to have a big drawdown. There's going to be, usually hit a wall in September or October, and we'll just watch for that. There's nothing to do about it now and nothing to panic about. We just follow the markets day to day, and we play our probabilities, really. So flipping to the Dow Jones Industrial Average, and that's a pretty good looking chart too. And we got green, green, and green across. Actually, we don't on the True Momo indicator, but we do on all the others. And really, we've got a light blue bar there on the True Momo indicator too. We're green, green, and green on the weekly over here. So, this thing, and by the way, I've been talking about it. That thing definitively closed above the gold Harvard line here, which it tried to get up above it last month twice and then failed, and then it's rallied up into it, failed, and actually closed the month now, because this is the last trading day of the month, above this line. That is a big deal, and it's a long-term signal, because this is the actual stop for it. If this was to come right down there immediately, or really at any time, this thing can continue to advance in a light blue fashion here. But as this comes down, you should get out of your position if it goes below that, because that is a longer term, that would be a long-term sell signal. But the point I'm getting at is this is a new potential buy signal for the longer term. It's a big deal. And the Russell up by 7.14%. I'm sorry, 7.14 points. The Russell has been up by 0.38%. So it's got some confounding signals here. Like this is a down arrow, and that's a kind of a big deal. But we got green, we got green, we don't have green, and we don't have green. We do have it all over here on the weekly, and this one has been lagging, but again, we closed up above that gold Harvard line. So we have the chance to continue going higher from here. And the odds have flipped over to that being in our favor. And I prefer a bull market, but yeah, so I think bullish markets are easier to trade, but that's just me. Here's the NASDAQ, and it's been, again, above those gold lines for a bit on a closing month basis, and we've been off to the races. And I don't know, that doesn't look like a new higher high to me. Closing. There we go. Sorry. The close is 13,787.92, and let's go to that close. 13,782.82. So it is. It's a higher close. So that's good. And then oil, I'm in a small position, or a regular size position now, because I dipped my toe in the water with a half position. Then I went a little further when it dipped a little lower, and now it is red, green, green, and starting to be green, but not fully. And then these are all red, so this is we'll see. I mean, it's got to get up and going if it's going to go, and I drew those other lines. This is really potentially still a triangle. It needs to break out to the upside if it's going to do it. It could roll over and take out this low base here, and if it does that, I'd say we're going lower. So we got some arrows over here pointing that direction, which is a little bit unnerving, but it's only one position of many. And bonds broke out of the channel the other day, which is irritating. Everything's green here, fell. This could be a pullback up to this channel line here, and that could ultimately signal a lower move. But we are green, and we're only green on 3, and we're red here. So and then red across the board. So we will see if this thing can advance, and ultimately it's really in a box around all that price, and has been for a bit. Even when it broke down here, it didn't break down as far as it did before. So we are putting in some potentially higher lows, and now we just got to get this thing's got to get up and going. What I like about bonds is it sometimes, not all the time, trades. It'll go up when the rest of the market goes down, and one of these days the market's going to take a nice dip, and maybe the bonds can get up and going. And that doesn't necessarily kill our positions, but that'll be a rough day for our total overall balance before things can advance. We might have to kill some positions and whatnot, but then maybe bonds can take off and fill in some for that type of a move. In fact, that's what we like gold for, except I don't think gold's in any position right now to be like looking at for an upside. Yeah, not to me. There's not enough. There's nothing really over here on the right hand side to trade that. And this is transports, so Dow Jones transports, and it's also off to the races. And that's that for that. Let's flop over here to stockcharts.com and look at the bullish percents. It's kind of like looking and seeing, basically it's confirmation of buying and selling is really all it is. And so this is flat. It's the industrials. This is up 2.5% for today. That's the New York average. The New York Stock Exchange, it's 55%. I'll show you just to do that. 55% of it's also that of the stocks in the New York Stock Exchange are on a point and figure buy signal. So there's 55% of them are showing bullish signals, which leaves the 45% still on bearish signals. And what we want this thing ultimately to do is get up here around 70, like it did back in this zone, maybe even 80 or thereabouts, before it rolls over, so we can ride it up and however it's going to do that, and then when it rolls over we can follow it either out of into cash, or we can actually play some trades to the downside along with signals that we're getting when that's happening. And the transports actually tacked on. This is a big deal. I hadn't seen that one today. Two new X's there, two new green X's, up 6.25%, and we are at 85% of the transports are on a point and figure buy signal, which again leaves only 15% that you could possibly get to 100, and there's nowhere else to go after you get up into this nosebleed section. When it rolls over, it could go way down, and that's what we look for. I mean, look at this move here. It's a great move to not be in when that thing rolls over into three new O's. If this thing rolls over into three new O's, that's a total opportunity to take money off the table, take risk off the table, in case this would happen. The other thing you could do is just set some tighter stops. So that's why we do this, and that's why I find a lot of value in the bullish percent indexes. The NASDAQ up only 1.75% today, and only 47.52% of the stocks in the NASDAQ are on a point and figure buy signal. The Microsofts and Apples and Amazons, and I think Meta, and those have been the ones really driving this market. What we really need to do is get the rest of them to take up some slack and push the market higher. I'm going out of order. The NDX, which is the NASDAQ 100, it turned on a new point and figure. I'm sorry, just a new column of O's today. That's not a point and figure buy signal. This is actually a point and figure sell signal, but this is obviously, it gets flipping back into X's, means that we've gone higher. If this thing goes up here and exceeds that X, then we'd be on a new point and figure buy signal, and we could just get all that reversed quickly. We will see. 63% of the NASDAQ 100 are on a point and figure buy signal. So since there's only 100 of them, I'd say that means 63 of them are on a point and figure buy signal. And let's look at SPX. Tacked on a new X today, and that's 66.6% of the stocks in the S&P 500 are on a point and figure buy signal. That is a point and figure buy signal in and of itself. And then the OEX, which is the S&P 100, up by 1.64%. So, and 62% of those are on a point and figure buy signal. And then the last but not least, this one's still vexing me, but it's fine. Our automatic trading systems. That's why I don't do everything in one place. I like diversification. This is the Dow futures, and we've been really going down a lot lately, with a few little hiccups to the good in between. This is what it looks like on a 1 year basis. So I'm really hoping, same thing. This is a year ago. That's when it took off. This is now. Let's have it take off again. Wouldn't that be fun? This is the Russell, and we haven't had a new green dot for that's going on a month, I think. This is what it looks like on a 1 year basis. It's still fine. And then the Nasdaq, which has had a giant pullback lately, which it had before. I actually noticed something. I'm going to try to figure out if there's anything I can do about it. Back on the chart, when we've had pullbacks and then we've had advances and then we got a pullback, not so cleanly there. We had this advance and that pullback. This pullback is about the same as what the advance was before. Then we have this advance and a pullback, which is almost the same as where it went before. Not quite. It doesn't quite get down there, which is good news. Same thing here, because now that's where it was before. Maybe we won't make it all the way down there and we can start to advance again. I'm going to look into a number of things. This is still our best system by far, or at least most consistent to be able to pick up money more often. We literally look at the time between the peaks, and if you look back here, it's been a while since we've had a peak. So, and there's just gaps there, and it's fine, but like if you look at this is a Nasdaq and it just powers on most of the time, and there's not much time between these peaks, even though that's a week or so, and that's probably close to a month. So you still have to be a trader. You still have to understand what your risk is. We still have to position size properly and have the account be able to withstand these pullbacks. So with that, I'm going to leave you guys. Hope everybody has a great holiday weekend and a great holiday next week. Take care, guys. Good trading, and God bless America.